Crypto is down. A crypto app just announced it's shutting its doors. We're also going to talk about tokenized gold. We'll talk about the narrative that's slowing down crypto adoption. We'll talk about Donald Trump, ETFs, and a lot of other topics too, including Polymarket. Hi, everyone, and welcome to CryptoRed, the crypto news channel. Crypto is down, like I said, but we're not going to focus on the price. I want to show you something I almost never show, the Fear and Greed Index. I'm not someone who checks it regularly, but it's an indicator that measures the level of fear in the crypto market, or in the opposite end, when the market is full of euphoria. And right now, this indicator has hit a new low. It dropped to 5. That's extremely low. The scale goes from 0 to 100. This level hadn't been reached in a very, very long time. In fact, it's the lowest level ever recorded on the Crypto Fear and Greed Index. You can see how it moves depending on price action and overall market sentiment. So yes, people are very worried right now. And when I look at all this, after thinking about it, I actually believe we've been in the bear market for a while now. Not just since Bitcoin dropped recently. I actually take Bitcoin out of the analysis. I focus mainly on Ethereum and the rest of the crypto market. For me, most of these crypto assets have been in the bear market since around 2024. Why do I say that? It's because Ethereum has basically been ranging between $1,000 and $4,000 for several years now. Altcoins have been trending down for a very long time. And more importantly, there's a total lack of interest from the general public. Just look around you. How many people are still actively into crypto? There is way less excitement than in 2020, and especially compared to 2021, I haven't seen anything close to the kind of bull market vibes we experienced back then. Even though institutions pushed Bitcoin higher, the rest of the crypto market hasn't followed. I just don't see it. So I think this might last a bit longer, maybe a few more months, I don't know, but I remain optimistic about solid cryptocurrencies over the medium to long term. I don't have any concern there. What I do wonder is what the next bull market will look like. Will retail investors actually come back? Or will it be driven mainly by institutions, by countries, by sovereign funds? That's what makes this period fascinating. My investment thesis hasn't changed a lot at all in several years now. I'm still extremely confident in how I invest, in how I choose strong, robust cryptocurrencies, and also how to grow those assets. Whether you're holding a crypto for the medium or long term, it's really a shame not to earn a percentage on it every year, because over time that can increase your total crypto holding by a lot, by 20, 30, 40%, and that's huge. So yeah, let's talk about something else. Let's talk about Polymarket. Polymarket just announced a new type of market, Bitcoin up or down over the next 5 minutes. So you can bet on whether Bitcoin will go up or down in the next 5 minutes. There's a timer and you can watch the price move in real time. Honestly, it looks like gambling. It's basically a casino, because that's what's next. 1 minute, 10 seconds, 5 seconds. And what about Bitcoin up or down 5-second market? That's not trading skill. That's pure prediction, pure speculation, it's just random. It's like a random game. Now, I know there are market makers on this kind of market. Some people run arbitrage bots that looks for price differences between platforms to try to lock in guaranteed profit. Yes, some people do that, but overall, this still looks very much like gambling to me. I strongly advise against using this kind of market unless you truly know what you're doing, unless you're running bots and using advanced tools and data from multiple platforms that give you a real edge, if it exists. Polymarket is doing this because it generates volume. It generates a lot of money from this kind of activity. Betting on presidential election happens once every 4 years in the US, but betting every 5 minutes, that's nonstop. Just imagine the amount of volume that can be generated from something like that. Polymarket is also expected to launch its own token soon, the Poly token. They've teased it multiple times already, so it should be coming really soon. So yeah, maybe there are also people right now trying to play the Polymarket airdrop by actively trading on the platform, because clearly the token will probably be distributed to people who have been trading on Polymarket. That's usually how these things work. So I imagine some people are positioning themselves just for that. Then I told you about the crypto protocol that's shutting down. It's ZeroLend. ZeroLend, it's a lending and borrowing protocol that was deployed across multiple blockchains. They were really present on a lot of different chains, and now the founder has officially announced the closure of ZeroLend. The token had already been struggling. The TV had been dropping for quite some time, the market cap as well. And now we were looking at a market cap of around $63,000, whereas back in 2024, it was close to $15 million, even above $15 million. That's brutal. We're talking about a drop of more than 99% in the token's value. And yeah, it's sad to see. But it also shows the risk when you invest in small cap cryptos. Sometimes you think, what's the worst that can happen? Well, the worst that can happen is that the token can go to zero. The project can shut down completely. There's no floor. Yeah, the floor is zero. So be careful. Now, of course, investing in small crypto as part of a diversified portfolio with a small allocation and proper risk management, that's totally acceptable. I've done it myself. It's not crazy, just be aware of the risks. But having a portfolio that's 100% altcoin, I'm telling you very clearly, that's too risky. Not being exposed to BTC and ETH at all, that's just too risky. I've said it before and I say it again. And going into small, fragile protocol like this, it's good, but it's even more risky. And going all in on this kind of protocol, it's crazy. Now let's talk about Pokemon cards. You might be wondering, what does have to do with crypto? We'll get to that. You probably know Logan Paul, the YouTuber, his brother, Jake Paul. They starred on Vine before YouTube. Jake became a boxer. Logan does a lot of different things. And Logan has been involved in NFTs and crypto for some time. He's tested a lot of things in that space. But here we're not talking about NFTs, we're talking about a real Pokemon card, a very rare Pokemon card that Logan Paul bought for $5.3 million a few years ago. There are only 39 of them in the world, and apparently his was the highest graded, and now he's sold it for $16 million. He sold it to the son of Anthony Scaramucci. Scaramucci was briefly the White House communication director, I believe it's the name of the title, under Trump during his first term. He's also an investor. He runs funds. He has been involved in crypto as well. So Logan Paul bought it for $5.3 million and sold it for almost triple the value, more than triple the value. That's huge. What does that show? It shows that the speculative bubble around rare physical collectibles is still very much alive. And that's what I wouldn't be surprised to see similar massive sales continue in the NFT space next, especially for the rarest NFT like CryptoPunks and special CryptoPunks. It wouldn't shock me at all. What's interesting also is that Logan Paul had previously been involved in launching a platform called Liquid Marketplace, which allowed the tokenization of physical assets and NFT, and he actually tokenized that same Pokemon card, but the sale was a failure. Only a small portion was tokenized, and eventually he bought back the tokens that had been issued. In a scenario where that tokenization had worked, some people could have bought shares of that card, and 5 years later, they would have made roughly 3x return on this investment. But that's not what happened. It didn't work out that way. Some people say it's not fair, the token holder should have benefited from the resale, but yeah, that's not the route that was taken, since token holders were offered the refund. I just want to show you that speculation on where physical items and by extension where NFT is still very real, and there are still people buying this kind of cards for millions of dollars. And next, a clarification on X and what's coming in the next few weeks. There were articles saying that the ability to trade stocks and crypto directly on X was coming in the coming weeks. So here it's an article to clarify that X is not going to offer directly trading itself, at least not them. They will use partners maybe later, but X is just a social network. It's not becoming a broker. They said that, the chief product officer said that. They're not going to get a license to offer crypto trading or stock trading. If trading is offered, it will be through third parties, partners that integrate into X. So what X will likely provide is access to trading information, maybe some tools, maybe the ability to redirect you to platforms where you can trade, but they won't execute the trade themselves, at least not in the beginning. Honestly, that's a bit disappointing, because I would love to see X go much further with this, almost become a real competitor to apps like Robinhood and others, and offer direct trading natively inside the platform. Because let's be honest, this is where a lot of traders are. This is where the crypto community is. There's a massive crypto presence on X, so it wouldn't be crazy at all to integrate trading directly there. Now, moving on to tokenized gold. Tokenized gold is exploding right now. Gold itself has been on a year lately. And as a result, the tokenized gold asset like PAXG Gold and Tether Gold have seen a huge increase in market cap. And now we've got the big market maker, Wintermute, stepping in as well. They're starting to trade PAXG Gold and and the Tether Gold token. That tell you something. It tell you institutional players and large accounts are getting interested in this type of exposure. It's another way to hold gold. It's just a different way to hold gold than ETFs. Well, for me, the biggest advantage is simple 24/7 liquidity. You can sell tokenized gold anytime, Saturday night at 10 p.m., Sunday morning, no problem. Markets are open. With traditional gold ETFs traded on stock exchanges, you're limited to market hours, and that's a major issue for people who want liquidity at any time. Now, let's talk about privacy, because this is a big topic. There are quite a few VCs and industry players who believe that the lack of privacy on blockchain is one of the main obstacles to mass adoption, especially for institutions. And I agree with that. CZ, the owner of Binance, just said that. He thinks that radical transparency sounds good in theory, but in practice, it's not scalable for everyday life. I totally agree. You can't realistically receive your salary on a fully transparent public blockchain where your employer and potentially anyone else can see all your income, transaction, and how you spend your money. That's just not viable. Imagine a company paying salaries in crypto. Everyone could track the wallets of the employees. You could analyze who earns what. You could profile spending habits. You could compare compensation. That opens the door to massive privacy concerns. Sure, there are ways to protect yourself, mixers, privacy layers, more complex wallet management, but it's not simple. And for mass adoption, it has to be simple. We need built-in privacy at the wallet level. That's why the Ethereum Foundation and Vitalik are working on a wallet-based privacy solution that integrates as deeply as possible at the wallet layer. Its name is Kotaku right now, and they're developing like some kind of proof of concept to show how it would, how people should do it. I believe that thing will happen in the future. Most blockchain will likely remain relatively transparent at their core, but then you will have privacy overlays built on top. And that's an area where there's still a lot to build. There's a lot of innovation left to do. And I hope it will be done. Finally, let's talk about ETFs because there have been a couple of new feelings. There's an ETF being proposed that would combine Bitcoin and Ether, launched by Trump Media and Technology Group, Truth Social. They announced this ETF and another one tied to the Chronos token, CRO, the token from crypto.com, and that would include staking features. So clearly they're not slowing down when it comes to crypto-related initiative. Donald Trump keep pushing forward on the crypto front. We've talked a lot about World Liberty Financial. They've generated hundreds of millions of dollars, possibly even over $1 billion through their activities. His sons have also launched American Bitcoin, a mining company that's been valued very aggressively. And at this point, Trump is really positioning itself as the crypto president. Now we're just waiting for him to pump the market a little, because honestly, most people didn't expect crypto prices to be this low after he won the presidential election a while back. That's what I wanted to share with you today regarding the latest crypto news. I hope you enjoyed the content. Don't forget to like, comment, and subscribe, and I'll see you tomorrow for another video. All right, take care. Bye-bye. Ciao.